Oh my goodness, this is what we've been waiting for if you're an equity investor. My name is Stephen Jeung. This is for informational purposes only. This is not investment advice. Do your own due diligence. All right, that's my disclaimer, guys. So anyhow, if you've been following me, I want to do more financial videos here at the hospital. Stepped outside because the market was ripping this morning, and I want to address this. And people are thinking, what is going on? Why is the market up so much? Dow Jones 1.34%, S&P 1.84, NASDAQ 2.77, IWM small caps 2.07. The VIX, the fear index, is down 8% today. And the dollar is holding up there. Bitcoin's up 6.52%, 63,730. MicroStrategies up 11.69%, and IBIT 6.24%, and Ethereum 7.61%, Solana up 11%, Tesla up 6.83%. Big day. So what is going on? Why is the market ripping? I knew this was going to happen. This is a term called "don't fight the Fed." When the Fed cuts, usually, obviously, there's more money circulate into money supply is created, and therefore interest rates everything's gonna be going down. Like credit cards, mortgages have come down, obviously. Just make things easier. Borrowing costs are gonna be easier, and they say they cut 50 basis point, which was a big cut. I'm really proud that Jerome Powell actually had the guts to do 50, acknowledging that he should have done 25 on the last meeting, and he's forecasting, I think, another 100 basis points this year and next year as well too. So that's a pretty big deal. So as you print more money, these cycles are all based upon money supply. So the more money you print, only downside of that is maybe inflation might just start to push up, which might be a problem. But right now he has satisfied the dual mandate of keep unemployment low, relatively low, and inflation has come down from, I think, 11% to 2.4%, I believe. So that is a huge move. He's done a great job of that. Being the federal chair is probably the hardest job in the world, and it's the most important job in the world, actually. I think just as important, just almost as the president in terms of financial purposes, yeah. So yeah, assets will continue to appreciate as they cut more interest rates, as people's savings go down. They're forced to put money into assets, to investments, because you remember those days when you got 0% on your interest rates on your savings account and all that kind of stuff. That was like 2-3 years ago. You got like less than 100 basis points, 1%. But how long will this last? How long will this continue? Who knows? There might be a shoe to drop, the carry trade. If the yen starts to appreciate and Japanese central bank starts to raise interest rates, that I could see that being a headwind and being a problem, but who knows? And then people will have to sell assets in America, around the world, and then convert those currencies into dollars or to yen. But I don't know. I think it's really good about that. But will this continue? Comment below, guys. Or do you think this is a fake out? Do you think this is a bull trap in terms of it going up and everyone selling and retail holding the bag? But I don't know. I think for short term, this is my own personal opinion. For short term money, I would do first and foremost, you want to make sure you pay low fees. So I would only do indexes, or individual stocks, but that requires some skill. But personally, I like IWM amongst the four major indexes, which is small caps. I think they're going to benefit the most. Tom Lee discusses this from Fundstrat. Amazing guy. He knows what he's talking about. He's called Bitcoin. He's called IWM. He's called so many calls right. So I'm a believer in I'm in the same camp as him. I think NASDAQ as well as S&P, Dow Jones, they'll all do well, but I think that IWM will do really well. So short-term money, I like individual index ETFs because basis like 15-20 basis points. If you're in a mutual fund, guys, please get out of them. 2.81 the average, and if this is the worst product that you can get into in America, in my personal opinion, just my opinion, is a variable annuity. It's pretty much like a mutual fund manager, like they have different companies, like I don't know, New York Life. There's just a lot of companies out there that manage money, and then it's in a wrapper of life insurance as well. And I heard that some study like 3.81 total fees on a variable annuity. So a lot of these fees, unfortunately, 403Bs. If you have a 403B or 457, insurance companies own that space. 403B is controlled by insurance company for the most part. And if you're in a variable product, if you ever lost money in your account, you are in a variable annuity. And I strongly recommend, if you've retired, to get out of that product and roll it over. Rolling over quite a bit of business to variable annuities. They're not performing, and the fees are tremendously high. Into an indexed annuity. What's the difference between the fixed index annuity and variable annuity? Variable annuity is like in the stock market, S&P 500, you just go up and down, whatever. But a fixed index annuity is that you have a floor of 0, and then you still have the upside of the stock market. So the market does well. So it's kind of like up, market's down, you stay flat, you go up, nothing that year, market crash, but you're still good. So it's like the market's flat. If the market's down, you stay flat. Market crashes, you stay flat. But there's a decade, like I keep on mentioning, people don't remember. I was a financial advisor for Merrill Lynch back in 1998. I saw 2007 was scary with Merrill Lynch, Lehman Brothers, all these banks failing. It was investment banks, commercial banks. It was a really scary time. Another thing, banks fail all the time. They fail, they leverage. They take your funds, they take your money, they borrow from the Fed, and they go rent out 10 times. So if you went to a bank and said, I need $100,000, you went to Bank of America or any bank, you're like, I need $100,000 cash right now, you'd have to come back like a couple of days later, because they would have to get the money, because the money's all lent out. So that people don't realize that, like, your money's there, but it's not really there. Insurance companies, from my understanding, they fail rarely. They're very conservative about their money. They're not leveraging their money like financial institutions. They're not, those kind of things. So that's one thing. One client asked me, like, how's insurance company? What's credit worthiness? Are they going to fail? But insurance companies do not fail. It's very rare. I don't know when the last time an insurance company failed. So that's one thing. You're more secure about that. And then what else do I want to say here? It's round, I'm sorry. Cryptocurrencies, my personal opinion, I'm bullish on Bitcoin. Anthony Pomp, I'm a big fan of him. Cryptos R Us, follow his channel. Invest Answers, I'm very bullish on Bitcoin. I think a portion of your funds should be allocated towards Bitcoin. This is my personal opinion. This is not investment advice. This is kind of on the internet. But yeah, because it is a new asset class. It's been legitimized by Wall Street. SEC has approved the ETF, IBIT. There's quite a few different types of ETFs, but I think I like that one. IBIT, BlackRock, they're huge. The liquidity is there. You should have a portion of your funds there. I don't know, speak to your financial advisor or whatever about that. And then index funds, that's for your short-term money. For your long-term money, anything long-term, like I'll say anything over 10 years, I just put my personally is all about fixed index annuities, retirement accounts, 401ks, or if you have accounts where you just want to put money away for your family and it's gross tax deferred, which is kind of big. And there's a lot of different fixed index annuities. There's some like horrible ones out there that have a cap, like the S&P 5. If you're in the S&P 500 one, you're probably in the horrible cap, because they all have caps of 9.5%, 10%, which is terrible. That means the market does 15, 20, 25. You get only 10%, and that's all. Unfortunately, that's the insurance company makes money, but you're still protected on the downside. But the products that I recommend that I work with, they have no caps. I will not be in a cap strategy, because that is terrible for the investor. You want no caps. So I'm in products without any caps. A lot of different ones like Goldman Sachs, Lit General, BNP Paribas. There's tons of them. And like HSBC, all the different indexes that I choose that I work with. I work with 70 different financial institutions, and I'm like this kind of guy who's crazy and neurotic about finding the best returns for my clients, and that's why we're 5-star on Google. And yeah, anyhow, so that's my take on that. Make sure that you protect your assets, your funds. If you're gonna retire in the next like 5 years, especially 5 years, you better roll your money over into a fixed index annuity. I don't know when there's going to be a market crash, but it will happen, and I will not be surprised. People will be surprised, but I will not be, because I've been doing this for 30 years, and I've seen so many market crashes, and they happen when people are so confident that it can't happen, unfortunately. So that's my take on that. So if you're interested in setting up a call, get a personal online appointment with myself and my team, definitely go to jungagency.com or click the link actually in my bio to set up a call with me. But that's my take on that. And pretty much, why am I doing this content? Why am I not just working with my clients? I'll be honest, I used to work, my story was that I graduated from Berkeley, And back in '98, I wanted to be a financial advisor. It was very difficult to get a job at Merrill Lynch. I finished the PDP program and all that, and I was working with millionaires, and that was pretty much how it was. And I couldn't help a lot of my friends and family because they just didn't have enough money. I grew up middle class, and after a while, I just said, hey, I want to help everyone. I'm at the hospital. I want to help nurses, union workers, just regular common folks, get them some financial literacy, and that's what I've been doing since I started the Jeung Agency in 2011. So we do 401k, we do rollovers, we do business plans. Now there's a requirement out in California. You have to set up a retirement plan for if you own a business, or you'll be fine. In Cal Savers, the default program is terrible. It's a Roth program, which is cool. The majority of the people will not qualify, especially business owners if they're doing well. It shouldn't qualify. I hope God they won't qualify. So yeah, I do that, and estate planning. Working with a lot of clients with that too, big estates and trust as well. So yeah, if you're interested in all that, we do pretty much the gamut of things. We have a team here to help, to support in any. If you have 100 million, or if you have 100,000, we can definitely assist you in helping, or 50,000 to be honest. I like helping everybody. It's crazy. At this point in my life, I can do that. So anyhow, guys, that's my take. Hope you guys like this kind of content. Do me a huge favor, like this video, share this video, and interact. And you can definitely reach out to me. Definitely follow me on social media, on Twitter, Steven_Jeung, TikTok, Steven Jeung, Instagram, Steven Jeung, LinkedIn, Steven Jeung. Yeah, so definitely. So I hope you enjoyed this video, and hopefully the markets will continue to rally. But at the same time, make sure you protect yourself and roll over. If you're in a variable annuity that has not performed for many, many years, and you see the statement, it's not doing anything, it's going to be fees that are eroding your returns. And that's kind of the reason why a lot of times they don't perform. I've seen, because the fees are so high and the underperformance. Money managers underperform the S&P 500 90% of the time, guys. So you're getting underperformance. So it's like a report card. S&P 500 is this. If you want to get above S&P 500, you're a student. If you get below it, you're B, C, or D. So that's how I look at myself, and that's how you should look at your finances. How good is my financial advisor? How good is the advice? A lot of you guys don't even have financial advisors, and I'll be honest with you, a lot of people don't care about you. If you have less than like 250, no one cares about you in the financial world. No one even cares. I mean, that's the reality. Back in the day, it was like, okay, go to Charles Schwab, go to Charles Schwab, go to Charles Schwab. A lot of you millennials are doing it themselves now, which is great, but if you want to, you probably have to have $500,000 to work with the Wall Street firms, and then if you want some attention, you need about $1 million. If you want your phone calls returned and stuff like that. So I know I've been on that side. I was a financial advisor. I've been on that side of wealth management, so I know you prioritize your clients and all that. But these days, people are about gathering assets and not really learning the business of what's going on in the market, and that's something unique with myself, not to toot my own horn. So if you're looking for investment advice, have a meeting, have a strategy, a financial plan, all aspects from term to term to IULs to tax-free plans to succession stuff. All right, guys, it's been long. Sorry for this long video. Appreciate you guys' support. Thanks.